Last XRP analysis was on the money. But what should we expect next? Are we due a price dump? Well, that's what we're going to cover in today's video using technicals, Fibonacci, Elliott waves. I do the hard work so you don't have to. And if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for over 15 years, featured in the best-selling book, High Probability Trading Strategies back in 2008. Now I bring that knowledge and wisdom to you, to crypto, because I love this space. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight in. So I said our XRP analysis was on the money. Well, we did a video on the 4th of August and we saw that we said, look, are we about to see a bullish reversal? From an Elliott wave standpoint, we said, look, we're looking like this wave 1, this wave 2, and we should see the initial wave 1 followed by a correction, initial wave 3, followed by a correction, and then the wave 5. So what we're going to look into is what has happened since we did our last video. So it's been around almost 3 weeks since our last XRP video. So let's dive straight in. Bang! That's what you call on the money. On the money. Check that out. So let's go back again. Right? The date was here. Yeah, you see that? And bang, it just unfolded. Just perfect textbook style. Textbook style. Fibonacci Elliott wave analysis, and this is the power of everything. But we want to look at what's likely to occur next. You know, because if you're in XRP for the long haul and you're just going to ride this whole wave, well, you don't really need to take any action. But if you're a shorter term trader or investor where you want to be trading these waves, this is referred to as swing trading, taking profits and then buying back in at a wave too low, then you need to be very, very aware. And taking profits is a great muscle to exercise. So we want to now zoom into this section and what does this look like. So I'm just going to actually move this up a bit so I just get it out of the way, and then we're going to zoom right the way in. So let's zoom in like this. And we can zoom in like this. And we just do this. All right, nice. So first things first, we want to look at the momentum on the weekly. So we're going to go to the top left chart. The thing I want to look at is this momentum indicator. Now we want to see how well does it marry up with these highs. Look at that. Marries up quite nicely with these previous highs in these ranges, right? It's not perfect, but it gives us a lot of great information. Say, look, when this blue line crosses below the red, it seems to coincide with these highs, right? And I'll make that even clearer because a lot of people don't use momentum indicators, and stochastics RSI is probably one of my favorites. But you can see this high here, this high here. I know these are local highs, but then what we're looking for is a confluence of events where we've got momentum matched up with price, matched up with time, matched up with pattern. And we're looking for Elliott wave patterns. And look at this last one, but we want to be aware of this, very aware of this. So we had a bearish reversal, so the upside should be limited. Upside should be limited. Right, so now let's just jump back into the daily chart. Let's get rid of these boxes. These are the boxes that we just drew. Right, just want to be aware of these. I don't know, there's a couple others. Should we get rid of them as well? Yeah, we'll get rid of them. Let's get rid of them. So what we want to look at now is, what does this look like to you? Well, let's pull up the momentum indicator. We'll just get rid of these. We can see that the daily also marries up quite nicely with these lows. But the daily is oversold, meaning we actually in the next 3 to 4 days should expect sideways to up. And then on the next bearish reversal, that's when we should see a completion of this initial wave to the upside. And that's what I want to focus on today. So we're going to be aware of the momentum doing this. So what do I see here on a slightly lesser degree count? So we said, look, this is a wave 1. Yeah, that's a bigger degree count. But are there waves within the waves? And the answer is yes, there is. So let me just move this like this. Let me show you what I'm seeing. I want to be very, very aware of this. A nice wave 1, a wave 2, a nice wave 3. It looks like, this is my guess right now, taking the momentum. The momentum helps us with this. An A, B, C over 4. We should anticipate a wave 4 correction and then a final leg up to the upside. Probably around here. And then that's what we're anticipating as the wave 1 high. So hopefully that makes sense. Let me just draw in the wave. Just put this into a micro count. Micro, bang. Right? Hopefully that makes sense. We've got a wave 5 of a wave 1 of this new wave 3 forming. So it's very, very simple. So what we can do now is, let's just do a wave 4 projection. So the most relevant wave right now is this wave here. So we just get rid of this. Is this wave here, right? This wave here. So we can project this with quite a lot of accuracy to say if it looks like it's forming a wave A, wave 4, where should it end? Well, there's a couple of rules. The rules from Elliott wave perspective is a wave 4 should not go into the range of a wave 1, right? So we know that. A typical wave 4 is, let's just do this here, 38, 23 to 38 of wave 1 to wave 3. So let's just go 23 and 38 are the two key numbers. 50 is the max, typical. And then also just a wave 3 in itself. Let's take this low to this high. And for this one, it's a typical 38% and 50%, 62% being the max, right? So you can see these range clusters, but let's just keep it really simple for now. Let's just focus on the minimum. Let's just double check. Boom, boom. Yeah, there and there. What we can also do is very quickly is, oh, by the way, I'm doing a Fibonacci Elliott Wave masterclass. Should be in the link below. It teaches you how to do this, so how you can read the charts. Because the challenge I have is you have so many coins and I have so little time. So I'm hoping to try and teach you some of this stuff. So we want to go 100% there. That's going to be there, and typical maximum. Boom. So now again, these two really clean zones. I'm going to do a Fibonacci external retracement. This is a confirming indicator. And the two numbers I want is 1.217. There we go. Bang. It's right into that range and right into that range. And then last but not least, we want to have time analysis. Time analysis, actually, we'll leave out, we'll do time analysis. We'll just do a quick, simple one, which is let's just measure how long the wave 2 has taken and project it forward. Yeah, we can see that it's gone beyond. And typical maximum is 1.618. You can see we've even gone beyond that. And then a typical wave ABC, there, 1.618 again. Boom. Okay, so we got these numbers, this number over here. So what we're gonna do, what I wanted to just do here live for you was we've got this range here, and we've got this range down here, both above the wave 1 high, but it should coincide over the next 1-2 days. We can actually go to a lower time frame, and we can actually, this is an hourly chart. We can also just narrow it down a bit more to say, look, what does this wave structure look like? Well, what does it look like to you? Right? This look at you know, because XRP is a beast of a project, and there's a lot of volume going through XRP. So what we can see here, this is important. This is a wave 1, 2, 3, 4, 5. Yeah, hopefully that made sense. And then we've got this, what looks like a ABC structure, and then it looks like a 1, 2, 3, 4, 5 forming on the downside again over here. 1, 2, 3, looks like a 4, and then a final 5. And what we're looking at a slightly more intermediate wave count is an A, B, and then a C of a wave 4. So this one becomes, we can keep this as an intermediate count, ABC, and then this one is the macro count. Did I get that right? This is the bigger wave count. Let's just do where are we? Primary count. There we go. So here we're looking for a wave 5 of a C of a 4. So what I'm going to quickly do here, this is powerful stuff, by the way, guys. This is next level. Most people don't know this stuff. So we can get rid of this for a second. Right. What we're going to finish on is a wave 5 lower degree price projection, which should coincide with the intermediate wave C price projection and the macro of a wave 4 projection as well. So we can do this quite fast. We're going to measure, I covered this in the masterclass, by the way, guys, how to do this in a bit more detail. But we're going to measure the wave 1 to the wave 3 low, project it from what looks like this wave 4. Make sure I get that right, bang. And then the two key ratios is 62% and 100%. Right. So what we're going to do here, we've got this cluster now. See, it goes right in there in these zones. So that tells me it's very, very high probability in these two zones now. It just really, really narrows it down. Then we can also do the same external retracement that we did previously, but more for this lesser degree count. And look, it goes right into that range again. So now it tells me this is the point to really pay attention to. Right? This is the one. Right? If it exceeds that, then we can expect down here, but likelihood is it's going to be this upper region, and we should see. So I've got quite detailed here, quite detailed. So we're going to look at, let's just finish on the macro picture. I've got a lot of lines going on, right? A lot of lines going on. So let's just clear it up. We got this wave 1, wave 2. Yeah, we're bang on the money with that, right? This part here, right? Bang on the money, which is great. Around 50, 60, 70% of the time, this will occur like this. It looks like a wave 3, looks like a wave 4. This is what we're just projecting now, the end of a wave 4. And then we should see a final surge up to a wave 5. This normally has a direct relationship with wave 1 and wave 1 to 3 as well. So we can project this, but we want to just wait for the movement to begin. It should also coincide with the momentum down here, which will be overbought. And then when the blue line crosses below the red line, and we've got a price pattern, and we can look at time as well, then we should anticipate that we should get a local high in this region over here, a wave 5 over wave 1, followed by a deeper correction, which would typically be around 50 to 78.6% retracement. So there you have it. So this is, really, really cool stuff. So we saw this movement to the upside. I don't think we've completed that yet. I think we've still got this leg down and a leg up before we see a bigger correction, which is more this part of the move. So we're going to anticipate that. So should we expect a price dump? Well, dump might be a bit of an extreme word, more of a correction, more of a breather. Think of the markets as they sprint, they run out of breath. We need to breathe, rest, recover, and then get ready for the next sprint. And the next sprint tends to be the wave 3. And the wave 3 tends to be the most bullish in most markets. So we should expect that to be bigger than wave 1. And we're anticipating as this being wave 1. So hopefully that makes a lot of sense. So XRP, on the money. Hopefully that's really, really clear for you to manage your positions. If you're a long-term holder of XRP, hey, no work to be done here. Just understand we'll probably see a move up, probably see a correction before we see the next move up. If you're looking to buy XRP for the first time, it might be better to be patient to see if we do get this correction. But remember, we're always working with probabilities, never certainties. That gives us the edge, the consistent edge in the market. So if you like today's video, like, subscribe, hit the bell notification. Let's finish on a quote. What's the quote of the day today, Jagir? Chapter 6. Let's see. This one's from Bruce Lee. A wise man can learn more from a foolish question than a fool can learn from a wise answer. A wise man can learn more from a foolish question than a fool can learn from a wise answer. Now, why I understand from that to be is, you can understand the level of an individual by the questions they ask, and a wise person can understand more from a person who's asking the question, because the level of the question will determine or dictate where their level is. So keep learning, keep practicing. Hopefully, let me know what you found most useful today, or on the money today. But, again, always remember we're in the game of probabilities. See you soon.